July 17th, 2025. Today was a small pullback bull trend day, which, they only really happen once or twice a month. You can get channel days, but a lot of times, a small pullback bull trend. The only piece of the day that really started on bar 12. We had a pullback, and then, basically the rest of the day was a small pullback bull trend. It started with the breakout above a bull channel. Obviously, breakouts above channels aren't necessarily high probability, but when the low probability event occurs, a lot of the times it'll turn into a bull trend, like you did today. I read an interesting study on signal bars getting 1R. Like if bar 2 and 3 get 1R of bar 1. I'm gonna make a members video at some point this weekend on it. I just think that's really interesting. I have a bunch of studies I've run recently. I gotta make a video on them. But anyways, regardless, 1 through 3, 3-bar micro channel, high probability of a second leg, but not really great to be buying. I'm not going to buy up here early in the day. I'd rather wait and, before bar 7, see the day form. Okay to buy the close of 6, expecting that we get at least one tick above the bar 5 high. After 5, something someone said to me the other day that, they think, or thinking that after 6 bars, a microchannel is more likely to reverse. It's not more likely to reverse. It's just more likely to get a complex pullback. So when you see things like this that are 5 bars and then you get a small second leg, you should be expecting a complex pullback before the bulls get another leg. I think we had a similar situation. Yeah, 6-bar micro channel. It's likely to get a complex. It's not likely to full on reverse and just sell straight off, but it will probably get a complex pullback. So a lot of times 3 or 4-bar micro channels we'll get 1 or 2-bar pullbacks, and 5 and 6-bar micro channels and beyond we'll get complex pullbacks. That's the trade-off for the higher probability that you're gaining. 11 and 12, a good breakout and follow through. 10 and 11, a good breakout and follow through. 10's a big bar and it's a surprise, but you don't want to sell 10 and 11 against this strong of a move, right? If you're looking at the 15-minute chart, you'd be selling against these really strong bull bars. So for me, if I was going to sell, I would like to sell the 9 low and then for a test of the 11 close. It makes a lot of sense. When you get a strong breakout like this and it's against a strong move, you should expect a pullback and be more interested in selling the breakout point. It's the same reason why 14 pulled back so much from 12 and 13. Yes, the bears got short and got their second leg, but the bulls 12 and 13 is strong and this is strong. So we're probably going to get another leg up. We'll probably get a tick above the high. However, 11 and 12 is not, you're not going to go straight up after 11 and 12. Odds are you're going to get some sort of deep pullback. So bulls are probably going to be more interested in buying in the lower third of this range than they are going to be in buying any sort of closes. 15 through 17, 3-bar micro channel. I did buy the close of 17. It's the second leg, so 1 pullback 2. So usually in the second leg, I expect a pullback and I expect the gap to close. So I was expecting 1 pullback 2, pullback 3, and then maybe go somewhere up here. Obviously, that did not happen here. We ended up just going straight up to the 1R target, which does happen sometimes, about 22% of the time that'll happen. So this is one of those cases where we just got right to the 1R target. And I took my profit up here. 21, reversal attempt, but not very good after, a 6-7-bar micro channel. Odds are there's buyers below. You can see we had 4 legs up, 1, pullback 2, pullback 3, pullback 4. I did not buy 31 because I thought it was 4 legs up. I thought it was probably better to wait rather than buy all the way up here. If it's a small pullback, if you're going to sit out of those trades, you have to be willing to accept the fact that if it is a small pullback bull trend and it's just going to go all day, which is really rare, but if it is just going to go all day, then you're just going to miss the rest of the trades. Once you learn how to accept that, it becomes a lot easier to just sit out and wait for your trade. So I did not take 31 because I do not want to buy leg 4 or leg 5. I would rather just let it go without me than take the risk. And sure enough, 33 and 34 is the risk. But again, it's a similar situation to here. First off, if you've been following me for a little while, I'm sure I've said this before, but when you get immediate follow through, there's a 96% chance you're going to get at least a half an hour before getting that 150% stop loss run. And so while 31 was not a winning, or 31, did not end up becoming a winning trade, we did reach the 150% stop loss before a symmetrical second leg was reached. It's even after 34, we were probably going to get a half an hour, and that's exactly what happened on 35. And again, the half an hour, that whole study was designed. It's designed as a way to get you out at break even when there's a surprise against you. So the reason I sometimes will take a half an hour is because the trade is not going the way I want the trade to go. When the trade's going the way I want the trade to go, I look for the full symmetrical second leg. When the trade is moving against me in a way that I do not like, I just look to get out. 33 and 34, pretty strong, but again, against a strong, very, very tight channel, traders look to sell what? The breakout point, the 33 low, and get another leg down. So traders, 33 and 34, breakout and follow through, they want to sell up here. Same way, breakout and follow through, they want to sell up here for another leg down. And you'd see they get it through here. Tight trading range. Bulls are thinking it's 3 or 4 legs down and are looking to get back up into this area. When you're finishing this with a 4-bar micro channel, the bull who bought the high tick of 32 did a reasonable thing as long as they have a wide stop and they're willing to scale in. We are at a trading range once we break out below the 28 low. So for me, bar 38 means we're in a trading range. And we were in a trading range, obviously, until bar 59. 48 through 50, it's a late leg, but I was very, very convinced we were going above this high. So I did take the buy. I waited for 51 and then I bought below 51. 53, 54, and 55. Again, it's a 3-bar micro channel. It's occurring so close to this high. It's really hard to buy because it's leg 4, but we're going to get up here. But a lot of times the market will trap traders out. So 57 would have trapped me out had I, been faster. Basically, I went to go put a stop 1 tick below 57. By the time I even got to, pulled the stop, it had already traded below and was reversing back up. It is a tight channel, so it's not a very good breakout and fall. It's not very good to trade this against the tight channel, but it's hard to hold long as well. 58 through 60, I set a limit order to buy the breakout point right here. I thought that with 56 and 57, we would get a little bit more to the downside, and I thought that this was probably not going to lead to 3 or 4 more legs up. We'd probably get 1 more leg up. So I wanted to buy low. It also started with an outside bar. So I wanted to buy low and look to buy around the 32 high. You can see it never quite tested it. So I ended up just buying the close of 62. I kept trying to get filled on a limit order. During 62, I tried to get filled like a tick lower than it was, and it never filled me. I tried to get filled a tick below. I bought during 63. I bought the 62 close during 63. I tried to get filled like at the midpoint of 62, and I got to a certain point where it just kept not letting me in, and I was like, okay, I'm really risking missing this trade, and I'm just trying to save myself a tick or two. So you got to stop being a cheapskate at a certain point. So I just bought the market. It ended up being a fill around the 62 close, and I got the symmetrical second leg to the upside. So up here where I got out. So I had a pretty good day today. Small pullback trend. They're kind of hit or miss on 3-bar micro channels, to be honest. I noticed that a lot of times you'll get small pullback trends, and you'll get maybe one early in the day, and then everything else just looks like a really late leg. So I have noticed that sometimes, or sometimes they'll start. We had one probably mid last week. Yeah, where it starts with 2 really good 3-bar micro channels, and maybe you only get 1 more signal the rest of the day. That's any good. So, sorry. Daily chart. A bull bar. Good for the bulls. I still think it's probably the top of a tight trading range. It's a little bit difficult to buy up here, but for the bulls, we could get a reversal down, but it's still a reversal and follow through for the bulls. So even though it's a tight trading range, it's at the top of a tight trading range. Even if we pull back, there'll probably be buyers at the July 16th high or below the July 17th low. And the weekly chart, you can see there have been buyers below. As far as the monthly chart goes, I said it all the way through, through May, and I said it all the way through June. I thought we would go back to this April high. I'm still not convinced that we're done with this April high. This is going to be a magnet for later. When you get a 3-bar micro channel like this, high probability that you're going to get at least something for the bears. The bare minimum would be testing the April high. I expected them to get it. I'm surprised they haven't, especially after May. I thought we would pull back in June and maybe test this high and find buyers. We have not done that yet. So I don't know. I'll be interested to see how July closes. But all right, that is going to be it for this